Hello, welcome back to TNC. It's mid-April, which can only mean one thing, it's tax season. I've always maintained that taxation is the top reason why socialist-leaning, red-blooded millennials ended up becoming fiscal conservatives by the time they turn early 30s after several tax seasons in a row. All joking aside, the honest truth is that nobody actively enjoys parting with their hard-earned money, but we have all benefited in some way from the range of social services that are paid for by taxpayer money. So it is both a social and legal obligation that we cannot run away from. But what we can do is to pay as little as possible, of course all entirely within legal parameters. In this video, I am going to firstly show you how to file for taxes in Singapore, and more excitingly, I guess, how to pay fewer tax dollars. And to be entirely honest, Singapore already has one of the lowest personal income tax rates. I've linked an article below in the description box that does a comparison across different countries. Also click above for my March budget video, in which I break down my portfolio and asset position. And in that video, I talked about how my effective tax rate is only about 0.75%. You really can't complain about that. Well, before we proceed, be sure to click the subscribe button and definitely like this video if you have been enjoying the regular content I've been putting out. Also, click below in the description box for a link to my intro video in which I explain the direction of my channel, the 4 different tracks that I'll be uploading content into, as well as the motivations behind why I wanted to start a YouTube channel. Let's first establish who needs to pay personal income tax in Singapore. First of all, you only need to pay tax if your total income in the preceding year exceeds 22,000. What then is defined as income? So IRAS, which is the Inland Revenue Authority of Singapore, the tax collecting facility, clearly defines employment income to be inclusive of basic salary, of bonuses, of all ad hoc stipends, allowances, and incentives and commissions. IRAS also clearly defines your employment income to include the CPF contributions from your employer, which is 17%. However, as I will explain later in the video, CPF contributions are generally provided with tax relief. But this means that when you are calculating for your eligibility for the tax year of 2019, you need to include not just your base salary or your gross income, you also need to include all your bonuses, your stipends and allowances, and most importantly, your employer contribution. So again, as long as the sum exceeds $22,000, you have to pay tax. You should also note that any capital gain from the sale of real estate or from investments in the stock and bonds market, as well as any dividends paid out from your investments, are not taxable. So if you deduct the total tax relief from your total income in the preceding year, you get the total assessable income from which IRAS would tax you a specific percentage of it. That is the tax payment amount. So what are tax reliefs? I know a good number of people around me who are first-time tax filers, and they actually think that tax relief is the total deduction to the tax payment amount. So that is not correct. Actually, tax relief is just the deduction to the total income that IRAS will assess of you, not the actual tax payment itself. Well, let's start by showing you how to file for taxes. So basically, if you're employed by a company that is already enrolled in the auto inclusion scheme, then you don't really have to do anything at all. So all your income information has already been processed and submitted. If a company is not enrolled, however, or you're self-employed, there will be places in the filing form for you to input your income information, such as your total income numbers as well as business expenses. You will be assessed only on your net profit. Well, inside the filing form itself, beneath the section where you declare your income will be a list of possible reliefs. So here in the relief section, some reliefs are already automatically included. You don't have to input them into the form. 2 reliefs of such come to mind. One is the earned employment relief, which everybody gets, as well as any NSMEN related or national service related reliefs. These the government already knows. So further below are a couple of reliefs where you should manually declare in this filing form. So after you are done, you should hit submit. Bear in mind that on the IRAS website, you can only amend this form formally once. Any amendment after that, you have to use the My Tax Mail system to submit and appeal, which is probably going to cause you quite a bit of trouble. So you have to be very careful doing this. So the deadline for submitting the tax form is actually 18th of April, which is yesterday as of the day that I'm uploading this video. So basically, y'all are screwed. I'm just kidding. Honestly, because of the extenuating circumstances, the government was actually really nice and extended the filing period until 31st May. But for subsequent years, it's always going to be 18 April. So just always remember and bear this in mind. The first 2 weeks of April, you should probably devote some time to filing for your taxes. So now let's get into the exciting part of the video where we talk about the different types of tax relief, right? Because everybody wants to save money that they don't have to pay. How do you legally pay less tax in Singapore? That is the key question. In order to do that, you probably have to maximally leverage all the reliefs you can get. Let's go over some of the most common relief types applicable to the average millennial. Number one is the earned income relief, which is $1,000 across the board to anybody who has currently been earning an income. So you get that relief from simply being employed. The second type of relief, as I've previously mentioned, is CPF relief. So for the entirety of the compulsory contributions to your CPF account, you get a dollar-to-dollar matching on the relief. So what this means is that, for example, if you earn a gross income of $6,000 every month for an annual sum of $72,000, 20%, which is your personal contribution, plus 17%, which is your employer contribution, for a total of 37%, which is $26,640. So that is the total amount of CPF relief that you'll be enjoying. Now, I must stress here on the word compulsory. Yes, voluntary contributions by yourself beyond the 20% of your gross income will be granted a matching relief. But this is only up to a certain amount. So up to $14,000 of your voluntary cash top-up to your CPF accounts and the CPF accounts of your immediate family members will enjoy a dollar-to-dollar matching relief. So out of that, a maximum of $7,000 is for top up to your own CPF account, and the other maximum of $7,000 is across all your family members, and the definition of that extends to your parents, your grandparents, your siblings, and your spouse. In an upcoming video about the Central Provident Fund and why I really like it, I will go into greater details about calculations, about the math, and the ceilings and limitations of cash top-ups. Fourth, every year you'll receive a relief of up to $15,300 for every dollar that you put into your supplementary retirement scheme account, or the SRS. Again, this will be a separate video in the future, but this is essentially a more voluntary and liquid form of the CPF, where you have greater control over the flow of funds in and out of the account. So in addition to CPF, you also have some tax benefits for having certain qualifying members living in your household. For example, if you have non-working parents living with you right now, you will be enjoying a tax relief of up to $9,000 per parent. If you are living with a spouse who is not generating any income of more than $4,000 every year, you will also be enjoying a tax relief of $2,000. If you're a young parent who just had the kid, you'll be enjoying $4,000 per qualifying child, or QC, while women also enjoy some special tax statuses. If your household is employing a domestic helper, the female taxpayer in the household gets to enjoy up to 200% of the foreign-made levy that the household pays. Additionally, if you are a woman and you're also a working mother at the same time, you get a 15% deduction on your first child, 20% for your second, and 25% for your third. Bearing in mind, this percentage is of your entire accessible income. Dang, the government is actually really generous when it comes to encouraging women to join the labor force while increasing the national birth rate at the same time. So these percentages, also bear in mind, are additive, which means they add up to 100% of a woman's income. However, the total relief per child for the working mother is actually capped at $50,000 per child. So for men who have served NS duties in the preceding year, you will be afforded $3,000 in relief. If you did not, that gets halved to $1,500. In addition, NS men's wife and parents per head enjoy $750 in relief. Now, this one probably wouldn't apply to a lot of people watching this video, but if your total CPF contribution to your own account in 2019 was less than $5,000, and at the same time you also paid the premium for a life insurance policy, then there will be dollar-to-dollar matching relief on that. And lastly, just want to say that all donations to charitable organizations will have a 2.5 to 1 matching ratio for relief. Well, it's important to note that your total tax relief caps at $80,000 every year. So yes, this actually includes your CPF amount. So for example, in this financial year, which means for 2021's tax filing, so if I don't count the voluntary CPF top-ups to my account, as well as top-ups to my SRS, I will only be enjoying a tax relief of $4,000. That comes from the earned income relief plus the $3,000 NS men relief that I have. So both of my parents are still working and they're quite far off from the 55-year-old age cutoff. So I don't get to enjoy the parents' reliefs. And in addition, now that I'm working, my mother will cease to enjoy the qualifying child and the working mother's deductions. So in general, starting this year, my family will actually pay quite a bit more taxes. Well, but luckily, Singapore's tax system is quite progressive. So for most of us, this table that you see is actually deceptively more terrifying than it looks. Because honestly, if you account for the whole suite of reliefs that I just covered that you might be enjoying, plus the fact that the first 20,000 of your assessable income is taxed at 0%, your effective tax rate is actually very, very minimal. So for example, despite the fact that I've hit the 11.5% tax bracket, my effective tax rate for 2021 is actually 0.75%. Well, lastly, I also want to dispel the misconception that you should avoid getting a pay raise or bonus just because it will bump up your tax bracket. This table is showing you is that only whatever income that is in excess of the various income thresholds will be taxed at a higher tax rate tier. So definitely don't turn down a pay raise because you don't want to pay more tax. The increase in tax is probably extremely marginal. Well, anyway, this is the end of the video. This was a very information heavy video about a pretty boring subject, but I thought it would be good to make it now because it's a tax season and I know a lot of y'all watching will definitely have to pay tax either this year or next year. When I first did my filing in March for the first time, it was actually extremely confusing. I didn't know what to do. So I hope this video in some form was educational and to some degree it helps you. And I hope that this video provided some information about how you can file for taxes, what kind of tax relief will you be qualifying and benefiting from, and ultimately it helped you to pay less tax than you really need to. Legally, of course, legally, I have to stress that. Kids, don't evade tax. You will go to jail, okay? You'll go to jail. If you really enjoyed this content, please don't forget to hit the like button, which will really help me, and be sure to hit the subscribe button as well for more regular and relevant content on personal finance, on credit cards and investments, and hopefully sometime soon after the whole lockdown is over on aviation and travel. Well, thanks for tuning in. Until next time.